There's major concern inside main markets that there will be a meltdown. And we can see the main markets are experiencing fear bordering on extreme fear. The question is, are we getting a higher low in fear, or is the fear going to break down, which means the markets will break down as well? Stay tuned. As the developer of the CTKS method, I'm going to inform you of what the structural smart money buy and sell levels are. You don't want to miss this video. Let's run the numbers. In the main markets in the past trading session, all sectors were down -1.26%. We saw a broad-based sell-off across nearly every sector, and Tesla and Amazon were quite hard hit. Even the energy sector didn't escape. We saw the S&P 500 futures come down, the NASDAQ futures come down, the Dow and the Russell come down. The Nikkei and the DAX sold off. China's Hang Seng index sold off, as did the ASX 200. We saw the United Kingdom sell down. Singapore, Switzerland, India, France and Canada also sold down. Taiwan and Russia came up. What's really interesting about this particular sell-off is a couple of things. The DXY is currently coming down. It's not going up. It is currently not a flight to safety into dollars. When looking through the main markets, we can see a spike in the VIX, the fear gauge of the S&P 500. Also, junk bonds, which are really good indicators of risk-on or risk-off activity, registered a lot of risk-off, especially as the NASDAQ 100 plummeted. Oil is still on its up case and is just waving back at the current time. The bond market has been incredibly hard hit of late. Fortunately, we saw a bit of an offset in yields, which was a bit of a welcome relief for the bond market. The flight to safety right now is into gold and also into digital gold, which is Bitcoin. Typically, we get a flight to safety into the DXY, into dollars, but that has not occurred. Just as gold has been a flight to safety, crypto has also been a flight to safety. And that's not just Bitcoin, that's also Ethereum, Binance Coin, XRP, Solana has done really well, ADA, Doge and Tron. As we predicted yesterday, Tron is starting to come down. Going across to ctksnews.com and looking at market analysis, we can see that there's a few high-impact economic data releases coming up. This week, the PMI is coming out. Fed Chair Powell is giving his speech in the following day. The initial jobless claims, GDP growth, personal spending and income, the core PCE, and finally, the Michigan Consumer Sentiment Final. Level 2 certification students and masterclass students. We've got a new release inside L2, which is the CTKS method paths, the power of three-dimensional risk management. You'll find that at ctksmethod.org and also inside the LV series of the masterclass. Please go and check it out. The real question right now, what is this massive concern being caused by? In one word, yields. The market is pricing in that the Fed will increase interest rates. The US 2-year and the US 10-year we need to look at from a structural level. One thing that we can see, currently there's a 99% probability of no rate increase. You'll know this number and these numbers are the same number. That means that there's no rate hike on the 1st of November Fed meeting. You'll also notice that there's a 0.1% probability of a decrease in the federal funds rate by 25 basis points. That's almost non-existent. The CTKS method is the world's most powerful smart money buy and sell level detection system. It does this by analyzing 3 tiers of charts. Tier 1 charts are the engine of financial markets globally. Tier 2 and Tier 3 charts allow us to stack probabilities, and we're going to do that today. We need to understand what the CTKS structure actually is inside the charts. I'll be sharing what are called SLs or Stanfield levels. You'll see that these are just not normal lines, they're very special. The US 10-year yield is a Tier 1 chart. It commenced the chart action in 1912, which is 40,650 plus days ago. The CTKS method analyzes all of those days. The CTKS method assesses what is called total market structure. The one thing that we've seen inside the markets, the yields have been coming up. The US 10-year yield has been exploding, and this has markets on the edge of their seats and price on the edge of a razor blade. I'm going to zoom into this particular area. We need to understand where the objective dynamic market structure is, so we turn on the monthly service indicator available from ctksmethod.org. When we look at the US 10-year, and this is equivalent to marking up 40,650 days worth of data, which is quite an effort, we can see that there's a lot of structural support at that 4.9046 level. This means that the US 10-year yield is moving into structural support, total market structure support. This is not what we want. Also, above this particular area, around that 4.94, we've got a fresh air gap up to the 5.05 level. This is a problem as well. Fresh air gaps can be rapidly filled. This is also what we don't want, and something that smart money knows. The US 2-year yield has also been exploding higher. You can see that price action here. The US 2-year started in 1988, so that's nearly 13,000 days ago. It's been marked up with the CTKS method. I'll just zoom in to recent price and show you what's happening. I'll just pop on the monthly service indicator so you can see where the structural levels of resistance and support are, where price comes down and gets magnetized too. If it falls through, it means things are weak, but the problem is there's so much underpinning structure in the US 2-year yield that we're likely to see a bounce. Again, that's a negative factor. Oil is a major driver of inflation, and the yields have been coming up to combat inflation. Oil commenced trading in 1861, and the CTKS method has marked up this 59,000 plus days. This is done inside the service, so you don't have to do the marking up. Understanding how to do the CTKS method, you can learn it yourself and learn it once and apply it for a lifetime. Or you can just join the service and understand how these different SLs work. You can see their different weights. The lighter weight means lighter, whatever that is. If it's above price, it's resistance. If it's below price, it is support. You can see a confluence of smart money support levels on oil right at this moment. Don't forget, this is actually analyzing nearly 60,000 days worth of data. This is not the normal kind of line that is drawn by people. One thing to note, I've just left a little note for you here. Fresh air gaps get filled very quickly. That means that when you see a big gap between structural levels, that's a fresh air gap, and price can just plummet down into it. But where does it hit? It hits an SL, especially if they're very tough and strong SLs. That will rebound the price. Where are we sitting now? We're literally sitting above a fresh air gap like we were back here. If the price of oil starts to decay down, it could decay very, very quickly. That will catch a lot of people off guard because people assume that support levels are equally distributed through market price action. They are not. If we get a bounce upwards from the current price around that 88.28 mark, that's really bad. That would signal growing inflationary pressures, and that will be bad for markets. We want to see oil come down in the next session. As the DXY has been coming down, we've noted that there's been a flight to safety into silver and gold and digital gold, Bitcoin. And when Bitcoin comes up, all of the alts party with it. Here, silver has been marked up since 1802, which is nearly 81,000 days ago with the CTKS method. You could do this yourself, or you could just add the indicator to your chart, your silver chart, and just pop it on. I'm going to zoom in to silver's current price. The key for us now is to just pop on the indicator And note the variety of different structural support levels and structural resistance levels. When they accumulate together, they get stronger. What we do notice that we have a structural level of support at 23.30. This is so far holding silver's price, as is the flight to safety. If the flight to safety continues, we would expect to challenge these upper resistance levels, 23.47 and higher, 23.55 and going up. But please note, silver's levels get pretty strong around that 23.76 mark. And don't forget, these levels accumulate and associate 81,000 days worth of data. This is not just looking back at the past couple of weeks or even the past couple of years. It's looking back at everything. Gold has benefited greatly from the flight to safety. When we look at gold, from 1833 is about 69,650 days ago. Let's just pop on the indicator so all that's done for you in a flick of a wrist. What you can see is this structural support has been hit numerous times, and we've got a bit of positive air here, which means it's holding up quite well. You want to keep your eye on this 1873 level. You can also see that this 1986 level was pretty strong, and then it was bypassed, but the level of resistance came out at 1996, and that pretty much put an end to gold's upward price momentum. The fact that we've fallen through this structural level so quickly is not good. It might mean the flight to safety is going to take a pause. This is why we must stack probabilities. There is the possibility when we look at the NASDAQ, which has been marked up with the CTKS method over 18,500 days. I've just popped the indicator on there for you so that you can see the structural levels or SLs. We're currently in a negative air gap. That is not good. We could come down and test this 12,790, but if things start to turn around, please keep your eye on the 13,109 level. Don't automatically assume that everything is going to zero. We must be mindful, but not scared, just prepared. Tesla recently came into the start of a negative fresh air gap. This is a little bit problematic. Just keep your eye on the 197 level. Those who know and understand the CTKS method don't really deal with retail indicators. We can see that the 200-day moving average at Tesla is below it, but when we turn on the indicator, we can see so much support. There is a fresh air gap here, but these lines are magnetized. That means they're not hard stops. They wobble around here, and you can see price has been wobbling both below and above these two levels, these two structural levels. To know where price is going next, you just simply look at the SLs, these levels. After all, they're drawn up, accounting for 48, 30 plus days worth of value. Analysis. You'll find with the CTKS method, you'll start to understand how price interacts with different structural levels. And when we look at Microsoft, we can already see that there's a negative fresh air gap. That's not what we want to see, but it's there. We have to acknowledge it. Microsoft has been trading for over 13,700 days. And when we pop on the Microsoft indicator, the one thing that you really want to note, at 334.80 there was a very strong structural resistance level that was playing out. That structural resistance effectively nailed the top of Microsoft. It tried to use this level 332.81 as support, but it didn't work. If it's not going above, it's going below. The one below was at 328. That didn't hold either, nor did the one below that at 327. What we're seeing is a rejection of that 328 and also a rejection of the lower one at 327. There's a probability that Microsoft could collapse down into this particular area. But the good thing is, around that 314 and lower, that 312 area, there's very strong structural support. You can see what an absolute blessing it is to know where the structure exists inside the market, especially where the negative fresh air gaps are, because that can cause price to fall very quickly and shake out a lot of people. Apple Inc. has been trading for 15,620 plus days. When we pop on the indicator, something very apparent is seen. We just couldn't get above that 178.72 smart money resistance, and we couldn't hold on to the 178.19 mark. We saw that the safety net rebounded price, and what you will find, price is always moving SL to SL, Stanfield level to Stanfield level. If it can't get above, it's going to the next one down. If it can't get above that, it's going to the next one. But if it's up, you can see price is always moving in a wave. Right now, we're currently favoring a negative price momentum down to this very strong structural support level at 171.66. Apple is really important to look at. It sets the tone for the technology sector. Without question, the most important chart that you can ever know the structural levels on is the S&P 500. They started in 1871, which is literally over 55,700 days ago. What the charts are telling us right now in terms of the CTKS method, there's a very strong structural level of support between 41.61 and 41.92. Even if we get downward price momentum, we would expect a technical rebound to occur here. Junk bonds are a very important risk-on and risk-off measure. Junk bonds have been around for little over 5,700 days. When we pop on the indicator, what we're seeking to understand, where is the structural support and structural resistance? We can see that we're a little bit weak on this 88.17 level. We're heading down to the one below at 88.09, but there's still a degree of structure that's underneath junk bonds. This is incredibly important because this structure can hold price and rebound it, as you can see here. Don't forget, these levels have been drawn up from a long time ago. This is not recent indicative price which will RIP your money. Bitcoin has been around since 2009 as increasingly taking on the role of digital gold. It's gaining widespread popularity. As well as that, it's a very risk-sensitive asset class. When we turn on the service indicator, what we note is that there was structural resistance at that 30.219 mark. Price came up to that mark and was rejected. Where did it go? If it can't get above, it's going below. And where was the SL below? It was at 29,731. We can see the price is just ping-ponging between those areas at the moment. Bitcoin looks a little bit weak, but it's held up surprisingly well. It's currently 29,871. Bitcoin is literally waiting for the main markets so it knows how to react. If you would like to become a member of the CTKS Method monthly service, it's just $49 right now. This is a Halloween special and it's really spooky. It's so spooky, it's so cheap. You can see how reading CTKS Structure, or the SLs, within the Tier 1, Tier 2 and Tier 3 charts is an absolute game changer. It does take a little while to get used to, but once you're used to it, it's just pure magic. Please let me know in the comments which way do you think the markets are heading. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.